Testing, mic testing. Mic testing done. Check, everything is okay. Audio, video, everything looks okay, guys. Let's begin. DT is the target. May 26, September 26, and Jan 27 exams are the target. My name is CA Sourabh Mutha, and I'm going to bring you these revision lectures for free so that wherever you studied from, you can top it up. Wherever you understood tax from, you can understand it even better through my revision lectures. What will be covered in these revision lectures? We'll be covering chapter wise. So all the 28, 29 chapters, we'll be having one revision video, which you can just play. And doesn't matter which book you're referring to, you can use my quick book that again is free. You just have to register in this link below and download the PDF and just take a print of it. Enjoy it, guys. This journey is going to be super smooth. I'm going to be bringing my not yet patented shortcuts for people who've learned from me. आप जानते हो कि shortcuts memory techniques होती है याद करने के लिए, because direct tax can become very huge, is very huge, but we will manage it very smartly. So without wasting much time, I'll tell you more about my journey ahead and how we are going to complete. But let's start the first session on direct tax. What you need a calculator. You need probably a handwritten notebook. You need complete 100% concentration, and let's start this journey. Watch these revision lectures one by one after the other, and you will finish your lectures with me. Bonus points. After every lecture, we'll be doing some case laws. So after every lecture, we'll be covering 5 case laws. So roughly 28 lectures into 5, that's about 140 case laws आप बाय हार्ट करोगे इन सेशंस में. तो हर सेशन के बाद 5 केस लॉ रिवाइज करेंगे, नेक्स्ट डे वो 5 रिवाइज करने के बाद दूसरे और 5 रिवाइज करेंगे. ऐसे आप लेटेस्ट केस लॉज जान लोगे ताकि एग्जाम में आपको डिफिकल्टी नहीं आए. We'll also look at sections. We'll also be covering different chapters in a very smart manner. So let's begin. And like my favorite YouTuber says, चलिए शुरू करते हैं. So guys, direct tax की journey 100 marks at CA final, and this is basically paper number 4. When you reach that paper, first group is over. This is the second group, or maybe you're still directly giving the second group. We have to be careful. 70 marks comes from direct tax and 30 marks comes from international tax. Of course, that is a differentiation for you and me. In the exam, they call it direct tax and international tax. First, we'll be covering direct tax parts, and then as and when we move ahead in the same sequence, we'll be revising. We'll also look at international tax. Let's start. Guys, always a comeback has to be from base. If you've seen those comeback reels, it starts at ABCD. Of course, we will not start at ABCD, but we will make a comeback from the base. So from base level, we'll be building up. And we'll try every time we go to the next lecture, we'll try and revise the earlier lecture. So here is the first one. As you can see, this is my quick book. Quick book is basically a summarized version of your book. It covers ICM material and it covers a lot of case laws, all summarized into this one book. So let's start basic concepts. Guys, first of all, tax cannot be randomly levied by the government. The tax has to be levied through the constitution. There's an article called 265, not very important from an exam, but which says that no tax can be levied unless there is authority of law or that the constitution permits you. Next, article 246, again not important. They say that there are 3 lists. Guys, just like in our house, let's say your mom is a homemaker, so she decides everything around the house. Your dad is basically the finance guy, money guy, so he decides everything around the money. And you are basically the fun guy, so you decide which movies to watch, etc., or which restaurant to go to. Same way, in the constitution, there are 3 lists. Union list. All the matters in the union list, the central government decides. The matters in the state list, the state government decides. And the matters in the concurrent list, both of them, they can decide. So these are some of the things. Tax is generally, income tax is generally in the union list. Basically, the central government levies income tax. Income tax components. First, Income Tax Act, 1961. So has it changed? Yes, it has changed, but not for your exam. The new Income Tax Act 2025 will kick in from the first exam, which will be May 2027. Then there is the Annual Finance Act, that is basically the budget or the amendments, as you know. For your exam that is happening in a few months now in May, the Finance Act applicable is Finance Act 2025. Yes, any exam in 2026, the Finance Act will be 2025. So for the next 3 attempts, May 26, September 26 and Jan 27, the Finance Act will be the old Finance Act 2025, which has been covered here in my videos. Next, Income Tax Rules 1962. There are circulars and notification, and there is case laws. So till when circulars and notifications will be applicable, I'll tell you. Which month is your exam? May. After that, calculate June, July, August, September, October, 5 months. That is 31st October of last year. That is 2025. That was the last day. After that, any new notification will not impact May exam. Same for September also. For September, if you want to think about it, October, November, December, Jan, February. So February 2026 is the last date for which after that notification will not apply to your exam. So we have to cut off because they also have time to prepare the paper, etc. So they have to cut off. So for the latest exam, that is May exam, the cutoff is 31st October. After that, anything new in the Income Tax Act will not impact your paper. Next, income tax rules are okay. Circulars. Right, circulars हमारे लिए नहीं होते. Circulars CBDT, Central Board of Direct Tax, internal organization को देती है. How tax has to be levied, etc. Not important. I'll tell you in this chapter which are the things that are important. But first, I'll revise the entire chapter so that you are well versed and we are starting. Our foundation are strong then. Notifications are basically something that apply to you and me. Case laws, yes. I CA intern में you never studied case laws, but an articleship, if you would an articleship in tax, when you represent to the income tax authority, you say case law. Example. If Supreme Court has decided and Supreme Court has said that 2 plus 2 is 4, then all other courts have to agree to it, and hence case laws become very important. Latest case laws are even more important. Just like when you shop, the new clothes become very important to you, the new shoes, the new watch. Same way, ICI also focuses on latest case laws, and we should also focus on latest case laws. Next, there are rules of interpretation. Now important. This could be a question in the exam. What are the rules of interpretation? How do you interpret or how do you make meaning or make sense of the income tax laws? This shortcut is let my great highness benefit. This is a shortcut, by heart it. What does this shortcut mean? First, let is liberal interpretation or literal interpretation. That means you will read the act and whatever the words are. Example, if it's an individual, then it has to be a male, female, minor, major, individual. So whatever the literal meaning is given, you have to use that meaning to interpret the law. That is the first literal rule of literal interpretation. Next, mischief rule. Guys, if literal interpretation is not happening well, then you look at the mischief rule. Mischief rule basically means what? That means people are trying to abuse or trying to circumvent a law, and that is the reason amendment was made. So you have to look at mischief. What was the mischief? That means what is the loophole that the amendment covered, and you have to interpret it in that manner. Next, great. Golden rule. If the literal interpretation and the mischief rule do not give you a sense of right meaning, then you use a golden rule. It is basically a compromise or a mixture between the literal rule and the mischief rule. H for highness, harmonious construction. That means when you are interpreting or understanding income tax law, it has to be understood in a holistic manner, not an individual manner. Example, when you cook dinner at home, it's not for you, it's for the entire family. Same way, it has to be understood in a holistic manner. Harmonious construction is the word. And last, B is benefit, a principle of beneficial construction. That means when you're trying to interpret, it should be for the benefit of the taxpayer, guys. Customer is king in India. The person who's paying the tax for the government, that is the customer. So it has to be for the benefit of the taxpayer. Next, who's an assessee? You and me could be an assessee. If you start paying taxes, you will become an assessee. I'm paying taxes, so I'm an assessee. Till you are not paying taxes, you are not an assessee. Next is assessment. Assessment का literal meaning होता है check करना. The government will check you. First, at the end of the year, you will check how much you've earned, income, etc. and pay your taxes. That's called self-assessment. Then when you file your return, it goes through a computerized checking called summary assessment. It is basically very, very short assessment, very quick assessment, and there is no human intervention there. Next, if they feel you have done something wrong, your second name is Malia or Ambani now, maybe Anil Ambani, or maybe they have some history of you doing something wrong, or maybe they've caught something which they feel is wrong, they can go into details, and that's called scrutiny assessment. And this is the case when the clients come to a CA and say, listen, yeah, I've got a notice, aap kuch karo. That's called scrutiny assessment. If you do not reply to their notices, the income tax officer is calling to his office, but you are not giving him time only, you say you're the busiest person, then they do a best judgment assessment. And last, if there is something that has escaped, income has escaped assessment, that means the year has gone by, you've not paid the tax, the government also missed it, they can reassess you later on. That's called reassessment. These are different types of assessment. We will learn about them in more detail in a chapter called assessment procedure. Next, person. There are different types of persons: individual, HOA, partnership, firm, company, etc. Now let's talk about what comes in the exam. In the exam, the main focus at CA final are two people. One is company. So company taxation takes center stage, and next is trust. These investment funds, trust, etc. They take center focus. Individuals, of course, partnership firm, they can ask you about that also, but mainly it is companies, trust, etc. Next, HUF, Hindu Undivided Family. You know about it already. Let's not talk about it. Just telling you, Hindu Undivided Family also gets a basic exemption limit, and while they pay tax, they have their own PAN numbers, etc. Company can be a private company, can be a public company, can be a domestic company, can be a foreign company. We'll talk about it more in detail ahead when we do assessment of companies. Firm is a partnership firm, LLP, both are taxed almost in the same manner, except one, two places they are almost the same. Next, association of persons. When two or more people intentionally come together to make profit. Example, me and Yash's Academy have come together to run a crash course and we make money. Who pays the tax? Yash's Academy or me? Guys, that's called association of person. AOP will itself pay the tax. And if we give a profit sharing ratio, then it's not an AOP, then it's a partnership firm. So AOP is very similar to a partnership firm if we put a profit sharing ratio. A body of individuals. In that, there is no Yash's Academy. Only individuals can become body of individuals or can make a body of individuals. Here, the intention is not to make profit. Example, you are three neighbors and the fourth neighbor died and he left his apartment in your name, three neighbors, because you all were very close to each other. And now you all three have an apartment, it's given on rent. Who will pay the tax? BOI. Again, here, you put a profit sharing ratio. BOI is also similar to a partnership firm. Difference between AOP and BOI. AOP spelling is different, of course. Yeah, AOP has persons, BOI has individuals. AOP is intentional, BOI is not intentional. It is by action of law. Local authority. Guys, generally local authorities like your BMC in Mumbai, BBMP in Bangalore, DMC, Delhi Municipal Corporation in Delhi, all these are local authorities. They generally are not taxed, except certain incomes they'll be taxed, otherwise they're not taxed. I'm just reading it. Income arising from supply of water and electricity, even outside the local authorities' jurisdictional area, is exempt from tax, so they get a lot of exemptions. Artificial person are basically like your charitable trust, etc., which actually don't exist in real, but they are artificial juridical persons. Income. Guys, there is a golden rule, and these rules no one has made. I have made it so that you can understand it well. There's a rule called, if there is income in India, you will have to pay tax. That's a golden rule, and they will put the incomes under different heads of income. There are 5 heads of income. We'll of course tackle all of them. Next, PGBP, IFOS, capital gain are the ones which are main. IFHP and salary at CA final level are not really very important. Application of income versus diversion of income. I got salary, I donated that money, or I bought an iPhone. The government says that is application of money. We don't care. You'll be taxed. But diversion of money or diversion of income is before it reaches you only, it goes away. That's called diversion. Diversion is not taxed. If you want to remember it, application is taxed. AT is a shortcut. Next, revenue receipts is generally taxable. Capital receipt like a loan is not taxed because you have to give it back. But capital receipt like selling of land, etc., is taxed under capital gains head. Next, profit from sale of securities and shares. If you are holding shares and securities, you will be taxed. Yes, so many people in India buy shares. They are taxed under capital gain. But it becomes your business, then you will be taxed under PGBP. Liquidation damages, compensation on termination of agency-led service contract. Let me talk about it. Guys, I have taken an agency of selling Royal Enfield bikes. Now that is an agency. I pay them some money. They make me the agent, and then I supply Royal Enfield bikes. And whatever amount profit we make, we share it. I pay them a fixed amount every year, and then I take the profit. So this is an agency contract. If I terminate this agency contract, then if I have many agencies, then one termination, the expense on that is a revenue expense. If there's only one agency and I terminate that, my business is over, that's a capital expense. Next, very important. What is a widely held company and what is a closely held company? As the name suggests, widely held means more people are holding it. Closely held means few people are holding it. But you cannot write this definition in the exam. So I'll tell you the shortcut for the definition. Guys, here it is. Government mutually listed 25 non-cooperatives. This is a widely held company. Any government entity or any entity when the government holds at least 40%, including RBI holds 40% shares or profit sharing ratio. Any mutual benefit society, any Nidhi company, any listed company, any section 25 company. Section 25 are those companies which are not for profit, generally to promote some art, dance, culture, etc. They have been made. And any company which are owned by non-cooperatives, all these are considered as widely held. Any company other than this is called closely held. In the exam, if you see a private limited company, generally it's a closely held company. Next, India, India, guys, you know the map well, so many states, etc. But India also includes the territorial waters, seabed, continental shelf, etc. Next, here is a small recap on a chapter called income from salary. It's not important, but you should remember, guys, that if you're working somewhere, example, as a CA, you work at Kotak Bank, whatever they pay you, the salary, allowances, perquisites are all taxable. My shortcut is SAP. S for salary, A for allowances, and P for perquisites. And you get 3 deductions. One is a standard deduction of 50,000. If you take the new scheme, the default tax regime, then it's 75,000. We'll talk about that in assessment of entities. Next, you get a professional tax deduction and you get entertainment allowance deduction. But entertainment allowance deduction is only given to government employees. Here it is, 50,000, 75,000. Only for government employees, this is entertainment allowance deduction, either 5,000 or the amount received or 1/5 of or 20% of basic salary, whichever is the lowest. Another golden rule. Whenever it's income, whichever is higher. Whenever it's deduction, whichever is lower. Next, deduction for professional tax, but any tax, guys, general rule is if you pay the tax, you'll get the deduction. That means from 1st April to 31st March, if you pay the tax, you will get the deduction. Next, again, non-important chapter, income from house property. I am the owner of a house. I am the owner of an apartment. I am the owner of a bungalow, a godown, a shop, and I rent it, not as a business. That income is taxed under income from house property. The government's third golden rule. If you are offering income to the government, they give you a return give back and they give you deductions. So in house property, you are offering rent as a taxable income. So the government gives you 3 deductions. First, municipal tax, but only when you pay. If it's not paid, you won't get deduction. What if I pay for last year? You will still get the deduction. Yes, areas also. Next, standard deduction 30%. That means every time you have income, there will be a standard deduction you will get. Congratulations, 30%. Not 31, not 29, exact 30. And if you bought that house property, that office, that go down, etc. on loan, whatever interest you're paying, you'll get it at deduction. But if it's a SOP, self-occupied property, example, a property in which I stay myself, then all the numbers are 0 except interest, which I will get a deduction up to 2 lakh or 30,000. These are all CA inter concepts. You can read through it. If there's any doubt, you can join the doubt solving group and ask me the relevant question. Next, this is GAV. There is municipal tax. You get to NAV. From NAV, you have 2 deductions. One is 30% and one is interest deduction. What if I'm holding property as stock? That means what if I'm a builder? Here is the point. You are a builder, you're Lodha builders, congratulations. The year your apartment building is ready, the government waits for 2 more years after that. Example, your apartment was ready in 23-24. Then 23-24 we will ignore. 24-25, 25-26. These 2 years the government will be patient, but after that if you don't sell it, they will assume your property to be deemed let out property. These are the deductions. Standard deduction, interest deduction. For SOP, the interest deduction is maximum 2 lakh or 30,000 as the case may be, and you can maximum have 2 SOPs in your name. What if I want to have 3 SOPs? Then have 2 in your name, have the third one in your spouse name. It's all about loving your spouse or parents or children. So in India, you split it out and you own apartments in different people's name if you want to have more than 2 SOPs. Otherwise, the government will assume them to be deemed let out properties. Not very important, guys. Next, if you co-own a property, example, me and my brother co-own a property, we don't, but if we co-own a property, then whatever rent is will be split between 2 of us. And if we stay in the same property together, SOP, then I will also get a benefit of up to 2 lakh or 30,000 and he will also get a benefit of 2 lakh or 30,000. Next, deemed ownership. If I have a house given on rent, but I don't want to be taxed on it, can I transfer it to my spouse or to my minor children? Yes, you can transfer the asset, but the government says the income will come back to you in these 2 cases. Unless you're separated, unless they pay you adequate money, then it will not come back to you. These are some examples. You can read through it again. Again, income from house property at CA final level is not really important. Stop wasting time on these topics which are not important. Next, maximum marginal rate. Guys, as you know, under the old scheme, let's talk about it. My maximum tax that I can pay is 30%. The surcharge that I can pay, maximum pay is 37%. HEC maximum is 4%. If you total it up on 100, it is 42.744%. That's the maximum marginal rate under the old scheme. Under the default tax regime, again, 30%. But surcharge there is only 25% maximum. If you don't know about it, we'll talk about default tax regime ahead. And HEC is 4% there. So that's called maximum marginal rate. When do we use it? In certain cases when the government almost wants to punish you. We'll see it ahead. For your exam, the previous year, that is the year you earn the income, is 25-26, and the assessment year, that is the year you are checked, is the next year, that is 26-27. Sourabh Mutha belongs to me, the name and the surname. Same way, previous year assessment year, they both belong to each other. They both are common. Next, guys, while you will be taxed in the assessment year, example, all the incomes that you earned in this year, you will be taxed in the next year assessment year, except 5 incomes called salad. In these 5 incomes, they may tax you in the current year only. What is the salad? First, if you're non-resident engaged in shipping business, your ship is leaving India, the government feels you might not pay the tax, they may tax you in this year itself. Next, A. If you're a AOP and a BOI and you basically are organizing event, after the event your AOP BOI is going to come to an end, example a New Year party, then they might tax you in the same year. Next, L. If you're leaving India, permanently leaving India, and they feel, listen, you might not pay your taxes, they can tax you then. E for event, sorry, I messed it up. E for event, that AOP BOI organizing an event is E. What is A then? If you're going to sell your assets so that you don't have to pay any tax and the government gets to know, they may tax you in the same year itself. And last is discontinued. unfortunately, you are discontinuing, stopping, shutting down your business. Shutter is down, locked up, and you might run away. So the government may tax you in the same previous year itself. Remember salad, and this salad is going to be very healthy if this question comes in the exam. Next, undisclosed income. Guys, in India, we all love earning income, but we might not disclose it to the government. So the government here is playing a cat and mouse game. They say, listen, you get an opportunity to tell me how much you want. If you don't tell me and I catch you, then I'm going to tax you at a very high rate under section 115 BBE. This is big black expenses or big evaders. Whatever shortcut you want to use, you can use. 115 BBE is a section that you might have to quote in the exam. So how will the government come to know? If you have some unexplained loan, as in your bank account is a big loan, or any cash credit, or in your locker they found some investments undisclosed or partly disclosed, or any of these kind of transaction. I'm just reading: unexplained loan, unexplained share capital, unexplained cash credits, unexplained investments, unexplained money, unexplained expenditure. You spent on a huge wedding expenditure, but you could not explain the source. Then the government says, where is this money coming from? Either you explain the source satisfactorily to the assessing officer, or they will tax you under 115 BBE. Here is the tax rate. The basic tax will increase to 60%, not 30, 60. There will be a surcharge. Doesn't matter how much you want, 12% surcharge. And 25% surcharge, and there'll be HEC of 4%, totaling up. If you total it up on 100, this 60 plus 25 plus 4, not literally total it up, apply it on 100. So 60% of 100, then 25% of that 60%, and then 4% of the total, you'll get 78% is what you'll have to pay. This is 115 BBE. Guys, two things here I want to talk about. If let's say you got some money and you're telling the government that, government, listen, yeah, this is my share capital. I've issued shares and they have paid me for the shares. Okay, great, no problem. But then the government can question the identity of the person who's paid you also. So you will have to explain their source of income as well first. But this condition does not apply to venture capital companies, because for venture capital, their logic or the intention is only to give away shares at a higher price. That's the first thing to keep in mind. Next, if you're borrowing money, example, in my bank account there is 5 crore rupees. Government asks, where is the 5 crore? I say, listen, yeah, I borrowed the money. And they say, what about the repayment? So I tell them I repaid in cash. They say, no. If you're borrowing money or repaying money, then they say that it has to be done through account pay check only. So in that case, if it is not done, amount borrowed or prepaid on hundi, then they will tax you under section 115 BBE. Next, tax can be divided into 3 parts. The first is basic tax, next is surcharge, next is health and education cess, which you know about. If you don't know, you can reach out to me and I will explain in more detail. But this is something you already know at CA Inter. You've done it to clear that exam. Next, as per the default tax regime 115 BAC, which is now, if they don't give you in the exam, an individual HUF, AOP, BOI can choose the scheme. And guys, for them, the basic exemption limit is 4 lakh. Yes, 4 to 8. 8 to 12, 12 to 16, 16 to 20, 20 to 24, and more than 24. These are the slabs, and the government has made it so simple, because you will have to pay tax at 0, 5, 10, 15, 20, 25, and 30%. That means if you earn more than 24 lakh rupees in India, only you will pay tax at 30%. And if you earn up to 4 lakh rupees, then forget, no tax at all. Not just this, they have increased the rebate limit to 12 lakh rupees. That means if you earn up to 12 lakh rupees and your tax comes out to be 60,000 rupees, if you calculate, see here is 12 lakh, and on 12 lakh it's up to 60,000 rupees, you don't have to pay it, because it will be considered as a rebate under section 87A. We'll talk about that, and we'll take a sum also on that. Guys, this is basically margin relief has increased, the limits have been increased, and here you can by heart it up to 24 lakh, it comes to 3 lakh, and anything more than that is 30%. Guys, remember, this is the default tax regime or the new tax regime. But if you opt out of the default tax regime, you like old things and you go back to the old regime, then this boring regime will give you only basic exemption limit of 2,50,000. Of course, senior citizens 3 lakh, super senior citizens 5 lakh. Here the rates are still the old rates. To up to 2.5 lakh, nothing. 2.5 to 5 lakh, 5%. 5 lakh to 10 lakh, 20%, and more than 10 lakh, 30%. So here, even if you earn more than 10 lakh rupees, that's it. You will still have to pay 30% tax. So this is much higher in terms of tax. Here you can by heart 112 500. This is a wrong number here, so I'll change it. This is 112 500 plus 30%, as you know. Senior citizens, you already know, 3 lakh, and super senior citizens 5 lakh. Clarification: if your birthday falls on 1st of April 2026, then you will be considered as your birthday you completed 1 day before, because technically, guys, that's how it is. I'll tell you the logic. If I recharge my phone today, 8th of February, then my recharge of 1 year will get over on 7th of February. One day before only it gets over. Same way here also. Not very important concept again. 115BB, you understood? 115BB, 115BBJ, we'll talk about ahead. These are basically some special rates of tax. And this 112, 112A we'll be talking about in a chapter called capital gain. Rebate in the new scheme, congratulations, rebate up to 12 lakh rupees. On that, maximum rebate is 60,000. And if you are the old tax regime guy, then only rebate up to 5 lakh and 12,500. Next, surcharge. Yes, guys, if you are lucky enough to earn more than 50 lakhs in a year total income, or more than 1 crore, or more than 2 crore, or more than 5 crore, then be prepared to pay a surcharge, that is a tax on a basic tax of 10, 15, 25 and 37% respectively. In the new scheme, it's the same except 37 is not there. Next, HEC is our constant friend. It will always be subject to 4%. Guys, if you are earning 4 incomes, by the way, example dividend income and those special rates of capital gain, which you will see in capital gain chapter, then on these 4 incomes, I'm just telling you that the maximum surcharge will be 15%. Example, if my income is only dividend income, 10 crore rupees of dividend income, then I will not have to pay 25-37% surcharge. My maximum surcharge will be only 15%. We'll do some calculation on this. We'll do some sum on this very soon. Next, tax for partnership firms. Partnership firms pay tax at 30%, or LLPs also and local authorities also tax at 30% flat. And if you are earning more than 1 crore rupees, then there is surcharge of 12%, simple, and HEC is 4%. Very, very simple tax rates for firms, LLPs and local authorities. Next, cooperative society. Guys, very, very important at CA final level, cooperative society. First, what does it mean? Where you are basically doing something for the benefit of some members, and that's a cooperative society. The government says if you are earning up to 10,000 rupees, sir, so low, yes, because cooperative societies generally don't make too much money, then up to 10,000 rupees is only 10%. From 10,000 to 20,000, it's 20%, and if you earn more than 20,000, then it's 30%. This is basically for cooperative societies, but something new. If you're a cooperative society, the shortcut is Bay is bad. Yes, that's the shortcut. What do you mean by Bay is bad? Just one second. Bay is bad basically is a shortcut. They say that if you're a cooperative society who does manufacturing, then listen guys, you are doing India proud by manufacturing in India. So we'll tax you only on that manufacturing income at just 15% under section 115 BAE. By the way, this 115 all special rates. And next is BAD. If you are not into manufacturing, but you just want to pay lower tax, and you can pay flat tax at 22%, guys. These are only for cooperative societies who want to opt for it. More details in assessment of entities chapter. Guys, Bay is bad as a shortcut, but you will be taxed at these lower rates. We have to give up a lot of deductions that you will understand only when you do the chapter called PGBP. All these deductions you will not get, unfortunately. कुछ पाने के लिए कुछ खोना पड़ता है. So if you want these lower rates, you'll have to give up on all these deductions. Next, there is something called 115 JC Just Cry. Alternate minimum tax will not apply if you choose this Bay is bad. So that's a good thing. If you don't remember alternate minimum tax, again, assessment of entities is coming up. And cooperative societies, guys, if you choose this new scheme, I'll tell you best things, rates are lower. Not good thing, deductions have been taken away. Good thing, alternate minimum tax will not apply. Bad thing, you will have to pay a surcharge of 10%. But if you're in the old scheme, that is 10%, 20%, 30%, then the surcharge is only up to more than 1 crore and more than 10 crore. All right, now comes to companies. Guys, if you are a company in India, and you don't want to pay the tax of 30%. By the way, domestic companies pay tax at 30%. Foreign companies pay tax at 35%. If you are an Indian company, domestic company, and if you are paying tax, if you want to pay lower tax of 25%, that means 2 years back, your exam year is 25-26, before that 24-25, before that 23-24, and that year if your turnover is up to 400 crores, that means you're a smaller company, then your tax rate can be reduced to 25%. That is all good, but let me introduce you to a new scheme called Banao and Becho 115 BAB. Here we go, Banao and Becho. That's a shortcut. In Banao and Becho, the government says that listen, if you're a company started in 2019 and 2024, then you can opt for Banao and Becho 115 BAB, but this is only for the new companies. Existing companies can switch to this Banao and Becho. You will be taxed again only at 15%. Again, the same deal is because you're manufacturing. And for the other incomes, you can opt for 115 BAA, Banao and Becho. No, this is the BAA, the second one, where tax is 22%. So, sir, can I choose both? Yes, you can choose. On manufacturing, it will be 15% on that income, and the other income, it will be 22%. But again, here, you will have to give up on a lot of your deductions. Second, I'm going a little fast because these are revision lectures, by the way. Second, after giving up a lot of these deductions, you will have to pay a surcharge of 10%, doesn't matter your income. So these are some of the pitfalls, but I think it's a great thing that in India you can banao and becho and pay tax only at 15%. That's a great thing. All right, as a foreign company, no banao and becho for you, no BA for you. You have to pay tax at 35%, but that's unfair. So why am I saying foreign companies registered in India? You can become an Indian company. Surcharge for foreign companies is very low, 2 and 5%, 2% if your income is more than 1 crore and 5% if your income is more than 10 crores. Marginal relief is a concept which we will do a sums on, but I'll give you a nutshell what is marginal relief. I'm earning 51 lakh rupees, I'm paying surcharge. My friend is earning 50 lakh rupees, is not paying surcharge. That's not right. Just because I earned 1 lakh rupees more, I'm paying surcharge, let's say, and I'm paying overall tax of 1,16,000, assuming, I'm just giving you a rough calculation. Then the government says, listen, your income is extra is only 1 lakh, but your tax extra because of that is 1,16,000, so 16,000 will give you a relief. That's called marginal relief. When do you calculate it? Whenever you're slightly above the relief limits or the surcharge limits, like slightly more than 50 lakh, slightly more than 1 crore, 2 crore, then you will calculate surcharge in the, marginal relief in the exam. Rounding off is very simple, the last digit of total income and the last digit of your tax liability, not heads of income. The final total income and the final tax liability you round off. See the last digit. If it's decimal, of course, ignore decimal, and the last digit is 5 or more, you go to the next number. Example 95, it becomes 100. 96 becomes 100. But if it's less than, for example, 94, it becomes 90. This is what it is. Now, after we're done with this chapter, it's time to look at the 5 case laws. Every day, guys, we will be doing 5 case laws, or every video will be doing 5 case laws, and you can revise these 5 case laws here. The first one, guys, Bank of Rajasthan. This is a 2024 Supreme Court case law. First, I'll tell you the logic behind it. Now, as you know, a bank buys and sells securities. So they bought some government securities. They bought it on 1st of January. And now they're selling it today to some other person. And today is the 8th of February. And the other person, guys, by the way, will lose out because they might not get full interest. So what they do is, the other person who's buying it from them, they have to, this is called break interest. That is for the period that they did not hold it, they will not get an interest, but they paid for it. So you pay them some money. Now that amount, will it be a revenue expense or a capital expense? That is a revenue expense. Yes, so they're saying because it's connected to your business, it's an expense, which is revenue expense. This is Bank of Rajasthan, very important because 2024 case law and Supreme Court case law. Next, Diversion Technologies Private Limited, guys, tech company. They spent some money on developing a new app, new development, new software, etc. But unfortunately, it did not succeed. Now, is that a revenue expense or a capital expense? Guys, capital expense is something that gives you long-term benefit, right? This will not give you any benefit, so it's a revenue expense. Next, Mahle Anand Filter Systems Private Limited. Again, this is 2023, but Supreme Court, we got to respect Supreme Court case laws, guys. They had some security deposit that they have foregone. Now, guys, if you forego security deposit, it's a capital expenditure, not a revenue expenditure, because it's a deposit. It's not your income, it's a deposit which you are forfeiting. Next, Saurashtra Cement. Shortcut is cement is liquid. Have you seen cement, guys? In raw form, it is liquid. So, guys, they had to pay some liquidated damages. That means, guys, for some work, they had to pay some damages. They had earned some damages. Example, someone is supposed to supply some goods, they did not supply on time, you charge them some money and they paid you some money. Is that capital receipt? Yes, it is capital receipt. And last, Honda CL Cars India Limited. As you know, guys, Honda is a Japanese company. They had told and they had given this company in India called Honda CL Cars the right or the technical know-how to service those cars. Then finally they took away that agency and these guys had to pay them some money. Is it revenue expense or capital expense? This is a capital expense because after that there's nothing left with Honda CL Cars. So these are the 5 case laws repeating: Bank of Rajasthan, Diversion Technologies, Saurashtra Cement, Honda CL, Saurashtra Cement is liquid, Honda CL technical agreement, and Mahle Anand Filter Systems Private Limited. These are 5 case laws. This is basic concepts. Now, what do you got to do? Guys, what you have to do is now open an ICI material. And from the ICI material, every illustration, every sum you got to go through, you have to solve. If there are any calculations on margin relief, surcharge, etc., solve it. Don't skip. Try and solve it on your calculator. You don't need to write any sums from this chapter, not the most important, but the calculations are good. Go through it. Anything that you don't understand, you can ask me. But of course, there are many things from this chapter which we'll discuss in more detail ahead in chapters like PGBP, assessment of entities, etc. So here it is, 34 minutes into the first revision video, and this is how we are going to be making lots and lots of revision videos. For every chapter there'll be one revision videos. Watch out for more. My name is CA Sourabh Mutha, and you're looking at CA Final DT revision lectures. Can also be used by CMA final students, by the way. See you in the next revision video.